previous sections, we've seen the negative list of supplies on which input tax credit is not available. The ground reality is that every business would have both input tax eligible supplies as well as ineligible supplies. What do you do in such situations? That's where proportionate credit comes into play. Proportionate credit deals with segregating eligible and ineligible supplies. Before we go into the details of proportionate credit, I want you to keep in mind this one very important point, that any business will have to maintain separate records for 4 categories of supplies: exempt, non-exempt, business use, or personal use. Supplies that are used for outputs that are exempt or non-exempt, supplies that are used for business or for personal use. Why is this? We've already discussed the 3 types of supplies based on the carrot and stick approach that the government follows for incentivizing value addition. There are exempt supplies, or there are ITC eligible supplies, or there is a negative list. So there are 2 cases where ITC benefits is not applicable. One, where there is an exempt outward supply, any supply used for adding value to exempt outward supply, ITC is not available. And second, that it is not used for business. If a business purchases certain supplies and does not use it for business, then ITC is not available. In normal terms, supplies used for personal consumption. What if you purchase a supply, you use it for business, but in turn you produce exempt goods? What happens in that scenario? Or the other way around? Confusing? Don't worry, it is very easy to understand once we've plot all the situation in a 2x2 matrix. So here you have 2 cases, 2 independent situations where the supply is used for business or personal use. That's one situation, one question. The second is whether the outward supply is exempt or taxable. So we have a 2x2 matrix, exempt or taxable on the y-axis, business or personal on the x-axis. Let's take the first box. It is a situation where you use your inward supply for business use, but you produce exempt outward supply. In such a situation, no input tax credit is available. The next box is where you produce exempt goods as well as you're using it for personal consumption. Then definitely no ITC is available. Both are not allowed. In third situation, where you're using it for personal consumption, but the goods you produce are actually taxable under the law. Still no ITC allowed because you're using it for personal consumption. The fourth situation is where you're using it for business purposes and you're using it towards taxable outward supply. It is here where ITC is available. Both the situations are T. So the situation is, even if one of the criteria is not met, then ITC will not be available. Check out the row for exempt, no ITC in both the square boxes. Check out the column for personal, no ITC for both. So even if one situation prevails, no ITC is available. It is only available when you tick both the situations, that it is used for business and it is used towards producing a taxable supply. Well, the conditions of proportionate credit fall exactly in line with the underlying principles of negative list. No value addition means no input tax credit. That's the logic behind if supplies are not used for business, no ITC is available. The second reason for items in the negative list was to avoid double tax benefit, and that's the logic behind exempt outward supplies condition. If the outward supply is already exempt, you don't have an output tax. Why would you take an input tax credit? Double tax benefit avoided. And so, there are 3 provisions under proportionate credit. Yes, 3. The first is business use, supplies used for business and for non-business purposes. Second is taxable output, whether the outward supply is taxable or exempt. And third is a special option only for banks under the proportionate credit. Remember the first point before we started discussing proportionate credit relating to maintaining separate documents. The business will have to maintain separate records for all categories of inward and outward supply and track where all the inward supplies are used. This is very important to follow the provisions under proportionate credit. In the first case, relating to business use, what proportionate credit states that any business which purchases goods and services, if it uses for business, it can claim input tax credit on it, while if it is not used for business purposes, ITC will not be allowed. Now, in order to compute these portions of ITC allowed and not allowed, the business will definitely have to maintain separate records of the usage of its supplies. Same is the case with the second category of taxable output. Inward supplies which go into taxable outward supply, ITC is allowed, while if they go into exempt outward supply, ITC is not allowed. And to identify these particular categories, the business will have to maintain separate records. And this is why it is called proportionate credit. You will get proportionate credit. The proportion is based on the usage. While finding out how much of your supplies are taxable or exempt, you'll have to keep two things in mind. Taxable supplies would include zero-rated supplies. These are supplies for which the percentage of tax prescribed by law is 0%. Zero-rated supplies include the export of goods or services or the supply of goods and services to an SEZ developer or an SEZ unit. Now you should know that SEZ units are considered as export areas. So, if goods are exported or if they are supplied to SEZ developer or SEZ unit, then there would not be any tax on them. They'll have a 0% tax. Even then, it is said to be a taxable supply and it has to be included in taxable supply calculation. When you're calculating exempt supplies, you will have to include those outward supplies on which reverse charge is applicable. That is, your customer will have to pay reverse charge tax on it. You will not have to pay any tax on that. You will not even have to collect any tax from your customer. So you will have to include reverse charge applicable supplies in exempt supplies. Moving on to the third item under proportionate credit, which is a special option for banks. Why is this there? Well, banks have a lot of services which are taxable and a lot of services which are exempt. By law, the services relating to accepting deposits or lending money, all the charges on it, service tax is exempt. And so it could get a little complicated for banks to separate taxable and exempt supplies. Following the canon of simplicity, GST law provides an option to get rid of this complication. This option is for banking company, financial institutions including NBFCs which are engaged in the business of accepting deposits or extending loans or advances. What is the option? The banks have two choices. They can either stick to the original, segregate as usual, segregate their inputs into taxable or exempt outputs and claim input tax credit only for those inputs which are used for taxable output, or they could go for a 50% proportion. Every month, they'll have to avail 50% of the eligible input tax credit on inputs, capital goods and input services in that month. The first situation, we've discussed this in detail. It would remain the same as is for all the rest of the taxpayers. Segregate supplies, ITC available on taxable outward supply, not available on exempt outward supply. The second case, 50% of all the input tax credit you can claim as ITC. The second 50%, the remaining portion, you waive it off in order to get rid of the complications of identifying separately what input goes into taxable supply and what goes into exempt supply. Now, there's a condition attached. This option does not come for free. There's a condition, but it's a very simple condition. Once a bank chooses any of this one option, it cannot be withdrawn for the remaining part of the year. The bank will have to follow the chosen option for the entire period. And so that was what proportionate credit was all about. In this section of the module, we understood the underlying principles of negative list. We also went through all the negative lists, the specific exemptions in the list. Within the specific list, motor vehicles and works contract, we recognized the uses of proportionate credit, and we also examined the special option available for banks under proportionate credit.